Welcome everyone back. Security Token Show interviews as always. And this week we have Ed Nwokedi, founder and CEO of RedSwan's CRE. How are you, Ed?
Doing great, Jason. How are you today?
Doing well. And even better now that you're on the show. We have some exciting stuff that came out from you guys recently, which was that you guys have your own real estate tokenization report that came out recently. Covering various aspects of the asset class. Really, we're talking about family offices, asset managers, investors, and how they're being impacted. We're talking about the assets themselves and growth projections, because tokenization, as we all know, is really entering the space hard now, with institutions jumping in and understanding the power of this technology. There are people in the space that have been around for years, including us, and of course RedSwan here. So Ed, give us some highlights of the report, just real quick, just things that people should look out for, and then we can dive into some of the more deep conversation around it.
Absolutely. I think the report is really just to kind of sound the alarm, to let major real estate investment companies know that a change is taking place with technology and tokenization, and how it's going to impact them in their business. I mean, directly impact them. Just a starting point with $4 trillion emerging over the next 5 years of real estate going on chain has a very powerful effect on all the major food groups that are touching that real estate, whether it be commercial real estate service providers like Cushman & Wakefield, JLL, or private REITs that are growing their asset base and looking for more investors to come on board. So we wanted to make sure that the industry hears it, understands it, because some people are still looking at security tokens being more crypto related and not something that they should focus on. But this is a direct impact to capital markets, and therefore we wanted to break it down by a vertical, because you're talking about hundreds of billions of dollars, if not trillions of dollars, in verticals that will be affected. And when you start talking about those kind of numbers and you see the players who are the leaders in that, something is going to change with regards to the leaderboard in those verticals. And it's going to be those who adopt quickly would actually make that change. And we've seen that through various types of technology developments over time, whether it be the internet coming on board and you had to start looking towards having commercial business on the internet, or you looked at taxis being affected by Uber, you look at Polaroid camera or Kodak being affected by digital. If you're not paying attention, you can be left behind very quickly. And I think this is the purpose of this report was to let them know not only how it's happening, what's happening within it, and what industries and also what countries are adapting to it very quickly. So it was a really in-depth report, about 65 pages, and it was really meant to make sure people can see themselves in that report.
It's definitely an in-depth one, everyone watching, and we're going to have the link in the description, so make sure you check it out. Ed, you mentioned an interesting number there, 4 trillion. In the report itself, it says that RedSwan's prediction is 3 to 5 trillion, right, in market value coming on chain for the real estate sector. STM, as anyone remembers, we also have our real estate report and more. But really what the thing here is our prediction report, where we thought it was 6 to 8 trillion. So I know in the graph here that one of the graphs on the report, it says that ours was used as the baseline. So I was just curious what the math was and how RedSwan came to the $3 to $5 trillion range there.
Yeah, good point. I mean, you're a little higher than us, and I like your number because I like more than less. But we looked at the overall consensus of assets going on chain, investment assets, roughly $16 trillion. And, real estate is roughly between 25 and 30% of most investments across the board. And so we can kind of figure out that real estate is in that size and being a more conservative level. And that's kind of how we came up with that. Then we looked at the various verticals to determine how much they're touching with real estate and how often they're churning that real estate to determine how they're going to be directly impacted.
Makes sense, right? And it's very hard, by the way, anyone watching, it's really hard. We've seen prediction reports all over the place from top consulting firms, from other, banks, asset managers, etc. But really, the idea here is everyone has a different approach, and it's really understanding what's possible here because, the DMV over in California had, put a lot of the car titles on chain, millions of them. What's to stop them from now doing the same thing with now title, right? And that's a bunch of real estate coming on chain, not to mention other forms of it, whether it's funds or equity, stuff like that, and really making this possible to grow.
Bottom line, though, Jason, these are both big numbers, whether it be
Yeah.
6 billion or 3 trillion.
Either way, it's a lot.
It's
Yeah.
a huge number and huge
Yeah.
impact in the industry for sure.
So let's talk more about that impact. You guys cover a couple other sections, but it was interesting to see family offices, asset managers, and of course, the individual investors are also covered here. But what would you say is the biggest impact for each of these segments? And I'm sure that each of them gets affected slightly differently, just depending on their goals and needs. But Ed, please, let's dive in.
Yeah, I think it's the REITs, the private REITs, that are going to be mostly heavily affected, because you're looking at over a couple $1 trillion in that sector alone. And those who lean towards tokenization will now be able to offer direct liquidity to their assets, which is a big change from the current system where they have redemption process. And if you look at the pain points, for example, Starwood, that had the pain points a few quarters ago, meaning that they had customers who wanted their capital return because it was that time to get their liquidity, but Starwood was not able to give the liquidity because they didn't have the cash flow, and also that's at the same time they were seeing lower values based on higher interest rates, and so they were in a tight situation in which they could not provide liquidity to their customers. Now imagine if Starwood were able to tokenize all those partnerships, the billions, multi-billion-dollar partnerships they have, that their investors are now kind of trapped in. These investors would be able to come to their website and actually get liquidity right off their website by allowing kind of a secondary exchange platform to the website. So it just makes a total difference. And if that was the case, that Starwood now is able to provide liquidity to all their customers and they're all happy, think about the other REITs, private REITs that have that same use case problem are going to now, their customers are going to shift and come to Starwood because that's where they want to park their money, where they don't have to be trapped over a long period of time. They have that liquidity. So that gives Starwood a bigger customer base, and the competition a lower customer. So that's just one example of where I see it affecting the private REIT industry. But then you have like the real estate servicing industry, capital markets like Cushman & Wakefield, JLL. I had long-term experience with Cushman & Wakefield as executive director. We did $70 billion a year in terms of capital market transactions, selling whole assets from one party to the next. That was a great lucrative business. And with it came a lot of toll takers who were taking fees along the way. Imagine now that if these $4 trillion of assets go on chain, that's removing $4 trillion of assets out of their ecosystem that they can't sell 100%. And the only way to actually generate, access to both of those markets, the traditional and the new, is to be able to get licensed with the SEC to be able to sell security tokens and now start onboarding new clients and providing tokenization as a service.
Yeah, you're bridging essentially two different worlds, right? You have the traditional assets, the crypto native investors, and vice versa. You also have traditional investors, asset managers that are also looking for those benefits of just having the same assets that they're already investing into real estate, but just having it operate on chain. There's a lot to dive into in there. For now, if you're watching it on the Security Token Show, we are going to move on to the next section of the show. But if you're interested in watching the rest of this interview, we will have it available on STM TV Official on YouTube. So go check it out.